What is the meaning of a full ratchet? A full ratchet is a contractual provision designed to protect early investors from dilution in future rounds of funding. This provision ensures that if the company issues new shares in subsequent rounds, the original investors will receive additional shares to maintain their original ownership percentage. Essentially, it prevents their equity from losing value due to the increased number of shares in circulation. This protection is often referred to as anti-dilution protection. The full ratchet provision benefits early investors, as it safeguards their stake in the company, especially when new shares are issued at a lower price than the initial investment. However, this provision can be disadvantageous to new or potential investors, as it reduces the value of their investment. For this reason, full ratchet provisions are usually provided during the early stages of funding and are generally enforced for a limited time. For example, consider a company, XYZ Limited, with 10,000 shares, each worth $10. An investor, Mr. A, owns 2,000 shares, making his ownership 20%.
Right now, Calkine is offering a 7-day free trial on its premium research reports. Get access to data-driven market insights combined with an in-depth analysis on financial markets across the globe. Don't miss it. Subscribe for the free trial now.
If the company raises new funds by issuing 1,000 new shares, the total number of shares becomes 11,000. Mr. A's ownership would dilute to 18.2%. However, with a full ratchet provision, Mr. A's stake would be adjusted to maintain his original 20% ownership. The main advantage of a full ratchet provision is that it protects the interests of early investors who took a risk by investing in the company. This protection incentivizes investors to continue supporting the company. However, the provision is typically unfavorable for new investors, who may perceive it as unfair because it disproportionately benefits earlier stakeholders. Full ratchet protections are often contrasted with other anti-dilution mechanisms, such as the weighted average anti-dilution provision, which aims to balance the interests of both early and later investors. While the full ratchet provides stronger protection for early investors, the weighted average approach adjusts the price in a way that reduces the impact of dilution for all parties involved. Anti-dilution protections, whether full ratchet or weighted average, serve to cushion the impact of dilution by adjusting the investor's equity stake when new shares are issued at a lower price. While these provisions are advantageous for early investors, they can discourage new investments and potentially make the company less attractive to prospective shareholders. For more related videos, please subscribe to the channel and click the bell icon to get notifications.